Analysis on the open expected on the Aussie share market. What to be watching out for. Stan Shamu joining us from IG in Melbourne. Stan, good to see you there. Yeah, just in terms, I guess, of the equity markets, the rally continued. Is the geopolitical risk, though, still lingering when we look at the moves in some of those other asset markets?
Morning, Brody. Absolutely. I think looking at equities, it seems like we have seen some downgraded sort of geopolitical concerns over the past 48 hours or so. But it certainly doesn't look like it in the FX space, because we are seeing some very mixed moves. The risk currencies haven't quite enjoyed the bounce or recovery that you'd expect in a situation where the market was feeling that there's significantly reduced geopolitical risk. I think the main developments is that the US seems to be quite happy with its progress in Iraq. It looks like they will be looking to form a government in the short term, and the US has certainly put its stamp of approval on the current situation. But of course, on the Russia front, we continue to get some contradictory comments. I think initial comments were suggesting that Russia is withdrawing troops from the eastern part of the Ukraine border. But NATO is reporting that they haven't really seen any decreased activity on that front. So it certainly seems like we might have to watch that space for a bit more information through the session. And of course, probably this is why as well we haven't quite seen the FX market show the sort of recovery you'd expect in a market that's seeing reduced geopolitical risk at the moment.
Just in terms of the Aussie dollar, we've got the NAB business confidence out today, also some house price data too. It's got down to around 92.6 in the session there overnight. I guess some of those factors you've just been mentioning. What do you expect? What's the positioning ahead of that data out today?
Yeah, the Australian dollar is relatively unchanged, basically since it dropped following that poor jobs reading. I think there really is no confidence to push it higher at the moment, and if anything, traders are probably looking to sell the Australian dollar at the moment. Of course, at the current levels it doesn't look very appealing, so perhaps if we do see a bounce potentially into that 93.2 level, which is previous support, then maybe the sellers could start coming in and just look to sell the Aussie dollar on that short-term strength. Of course, today we've got that NAB business confidence number. It should be interesting to see how conditions fared, particularly after we saw that sharp drop in employment last week, and as well the employment component of the NAB business confidence reading should be a key element to look out for today. So definitely it deserves some attention. In terms of the house price index, the market is still expecting a quarterly gain for house prices of about 1.1%, but this is of course a pullback from the previous reading, which was 1.7%. So any beats there could easily see the Aussie perhaps bounce a little bit before being greeted by sellers. I think definitely selling is probably the way to go with the Australian dollar. Just depends on what sort of levels you'd be looking out for.
I guess on to the ASX 200. What's your opening call? We saw some good gains by the miners in Europe overnight, a lot of earnings to come. What's your opening call for our market?
Yeah, we're calling it up 0.3%, but of course yesterday we did see it drop off its highs a little bit, so that shows a bit of a lack of confidence really, and it might be to do with some caution heading into these earnings at the moment. Of course, there are a lot of key stocks to look out for, and that's probably going to dictate the themes through the day. I think Bradkin's full year result is probably one of the most important today, not because it's the biggest company, but just mainly because it's one of those companies that really went through some tough times with a series of profit warnings in the past, as that mining cycle really bottomed. But of course now the market's been starting to get a bit more positive on the stock. In fact, it's been rising going into its results, and a lot of the brokers have actually felt that most of the bad news is out of the way. As a result, I think its forecast for full year earnings will be probably more important than the actual reading from the previous year. Of course, whilst a lot of people think that perhaps the mining services companies are now in for a recovery, maybe the bad news is not completely out of the way. Of course, any comments suggesting that they are confident enough to give outlook might actually be something to take quite seriously, and it will dictate how the rest of the mining services companies play out today. Of course, we've got What If as well reporting today, and of course they're under a takeover at the moment by Expedia. There has been some talk that there might be some competition concerns with this deal, so perhaps we might hear some further comments on this issue today. Apart from that, I think it will be all about how people position heading into the CBA result tomorrow. Of course, the banks are always key to how the market trades, and with CBA having bounced off that $80 mark yesterday, perhaps the traders are just reluctant to be short CBA heading into its full year results. We'll just also need to look at stocks that reported yesterday, particularly JB Hi-Fi. Of course, it was sold off quite heavily. Will it see a bit of stability today? That will be very interesting. Of course, it dropped around 7% yesterday following its results, so definitely a lot of company movements to look out for today.
Thanks so much for that, Stan. And we've just got some more breaking news coming